markets for a look at the M&A landscape overall. We are joined now from Chicago by the co-chairman of Credit Suisse's Mergers and Acquisitions Group, Steve Koch, and John and Dom, of course, staying with me for this conversation. And Steve, I know you can't talk the specifics about this Microsoft deal, but a lot of people have been making some hay over the fact that they're paying $8.5 billion for Skype. Those types of valuations, we've seen a lot of sky-high valuations in these deals, in these types of deals. What does that tell you about M&A?
Well, I think we're at a moment where the M&A market is heating up a little bit again. Depending on the sector, valuations are either on a historic basis, sort of medium to what they've been average. The tech sector seems to be heating up in particular. And, the issue in the tech sector is always a little bit of assessing what your basis for valuation is. Because, as you know, a variety of companies have had sort of sky-high valuations in the tech sector. Take Facebook, what went on a few months ago with respect to them.
Yeah.
Well, here's an interesting thing. So Facebook is not a public company. And Skype, as an IPO, was going to be the IPO that people could invest in technology without investing in Facebook. We saw last week that Renren, the Facebook of China, went public, and there was a huge appetite for that deal. So, and this is a question for Stephen, is what's better for the bankers? Is it to have a big deal like this where Microsoft says we're going to pay $8.5 billion in cash? Or is it to see successful IPOs of those technology companies that can go public, and then that leads to more IPO activity? I mean, I don't know how much they make on an IPO versus how much they make on a deal like this, but
maybe, the question also is not just, what about for the bankers, but also just for the markets, right?
Yeah,
what's healthier for the markets, Steve?
Well, I'm not sure there's a difference in health for the market one way or another. I think the better question to ask is what's healthiest or what's the most optimal for the people who invested and put up the seed capital to get companies, high growth, successful companies like this going. So, different investors have different objectives. Some investors want to see their valuation play out over a period of time, want to go public, and then see if the market takes an interest in that company and sees the valuation grow. Some investors are more interested in cashing out. I don't think the bankers' desires drive something like this. It's really the board of directors and the investors in a company have some sense of where they want to go over time. And I'm sure the investors behind Skype and the board of Skype decided that they'd rather see sort of two things. One, an immediate return on their investment that they've put in Skype over the years. Remember, Skype lost money for a long time. And then the other thing is, they're very interested in seeing a company grow, and they're very interested in seeing a company prosper. A lot of companies in the tech sector come to the realization that there's a limit to where they can go on their own, and they want to achieve the scale and breadth and support that they can get on a new platform. So my guess is the people at Skype said to themselves they can really expand their company, cause it to grow, cause it to succeed, cause it to have more of an impact in the world if they're part of a platform like Microsoft.
Steve, really quickly here, one thing we talk about is whenever prices go higher, it's because a lot of money is chasing fewer goods out there. Is the M&A environment right now a situation where there's a lot of cash ready to be deployed and not enough candidates to go out there and actually do it well? Is that the reason why, Steve? What do you think?
Well, I don't think it's only a matter of candidates. Look, there's always a scarcity value of companies that are truly innovative, that truly can move the needle for acquirers. But you have a phenomena where the M&A market as a general matter has been growing meaningfully over the last couple of years. Last year was up 20% over the year before that. This year, year to date, we're up a little more than 50% from last year. So you have a phenomena that the market itself is building some momentum.